So we went a little over, but I'm sure nobody was bored, and I'm sure nobody regrets that. I'm sure our next panelists and our next guests are also very happy with the panel that we just had now, because we went over some really interesting topics. But now I'm going to bring to you another very, very, very interesting guest, okay? Lennix Lai from OKEx. And all of you know what OKEx is, right? You're all familiar with OKEx, of course. Okay, so now why doesn't everyone give a very big warm welcome to Lennix Lai?
Okay, hello everyone. My name is Lennix. I'm the Financial Market Director of OKEx. So I've been spending many years, 10 years in traditional finance, working on risk management, working on tradable products. I was quant trading before, trading derivatives in CME in China. So 3 years ago, I decided to join or embrace crypto. The thinking that I really want to do something different, and I recognized that the traditional finance is actually experiences limitation. So maybe crypto, maybe crypto and blockchains actually serve the ultimate goal for finance eventually. So that's why I spent 3 years to build OKEx with a group of people that's very excellent engineering and excellent people, mostly based in APAC. Right now, we're headquartered in Malta, and we have 1,000 people right now. Our volume is like 5 billion USD per day, notional values. But today, we want to share about the journey of building OKEx, and at the same time, I would like to think about with you guys having a passive income or exclusively in crypto space. So before I would like to talk about very quickly introduce what is OKEx. So OKEx is basically one of the largest exchanges in the world with daily volume of over 10 million users, covering 120 countries before. But remember that we only start from 6 people. I just employed 6 people in Hong Kong just to build a very small exchange. Our intention of building OKEx is, hey, Bitcoin is super volatile, and the liquidity is super low. So what is our solution with the level of experience in financial? So what I'm trying to do is, in order to solve the volatility of Bitcoin, like 3 years ago, we talked about annualized volatility over 180% to 200%. So in order to solve this crucial challenge on Bitcoin, before Binance, before BitMEX, I think we need to build a really fair, transparent, orderly crypto markets. Because with that market, you will invite hedgers, speculators, liquidity providers, market makers, and long-term investors to really take Bitcoin seriously. And then with the combination of these different market participants, eventually the market volatility will eventually bring down. And what is our job? What is the OKEx job? OKEx job is basically, firstly, we need to build the market infrastructure first. Then we need to build a tradable instruments, not just spot. Spot means you can leverage Bitcoin. You can leverage your USD or your local currency to buy Bitcoin. But we need other things to solve the volatility of Bitcoin. So that's why we leverage the experience in financial market. We need different layer of tradable product. So we build futures, which is a financial contract that expiring on expiry day, which is weekly, bi-weekly, and quarterly, and for the Bitcoin miners to hash their price weeks first. And gradually, with the experience on us to building futures market, then we gradually extend our offering to build perpetual swap, which is a synthetic margin instruments that allow the traders to trade Bitcoin to behave like spot. So you don't need to worry about borrowing and lending, but at the same time, you can trade 100x with relatively robust instruments on Bitcoin. So you got those futures to lock in your price, to hedge your price risk. Then you got the swap to trade as a synthetic margin instruments. Right now, this year, we have a new product called crypto option for option. So for the very first time, you can lock in the delta risk of the futures, and you can have a speculated directional instruments for margin instrument like swap. Then you got the options for trading the underlying of Bitcoin, which allow your trader to hedge your volatility risk and also trade your volatility. So right now, with the combination of all these markets, also there will be a lot of help from the other industry players like CME, CBOE, BATS, and also BitMEX that creating a really good financial instrument of futures that right now I think the annualized volatility of Bitcoin is actually decreased from 200% to I think right now less than 80% right now, 30 days rolling over. So we actually, with the commitment of the industry, Bitcoin or other cryptocurrency markets, right now is becoming, getting a lot of attention from the regulators, getting a lot of attention from the reputable financial firm, because it's become a real, very serious alternative asset class. So right now, everyone in the world, despite the fact that the pension fund or hedge fund, they're talking about whether or not I need to allocate something to cryptocurrency. I think the industry really work a lot to improve this aspect. So at the same time, we're not just an exchange. We are actually building a lot of things on behind. I'll talk about that later. But a really interesting point I really want to cover is we recently launched our own on-chain monitoring system to analyze the entire blockchain for all the transactions from the very first beginning of the day. The purpose of this product is to counter the cyber threats and intelligence for the regulators and law enforcement. And that would eventually help us to identify suspicious transactions and to enhance due diligence for every single person that's trying to sign up on OKEx platform. Yeah, we remember the panelists that have a very interesting discussion regarding trust, regulations, and whether or not we need to put our crypto in the cold wallet or hot wallet or in exchange to counter the hacking issues, and the take of the regulators. Based our experience working with regulators for 3 and more years, including Chinese regulators, Japanese regulators, Korean regulators, Singapore, Hong Kong, US, European regulators. I think the trend is like the traditional exchange or the crypto exchange is looking a lot more like a traditional exchange right now, despite the fact that they might not have a proper or comprehensive regulatory oversight. So that means in 2018 or 2008, so we don't need to do KYC at all for all kind of exchange. We don't have internal procedures or staffing procedures. But the industry, I mean the institutional player, the professional, actually, our clients actually pushing us to adopt international standards of compliance. So right now, everyone in OKEx basically has a KYC. We have our own staffing procedures. We have our own internal surveillance program. We have our own trade monitoring system to counter suspicious transactions. We have our own compliance internal program to check large or small scale of withdrawal deposits. We need to take a very serious human video recognitions if you need to withdraw like millions of tokens out of OKEx. So we actually adopt a lot of bank-graded or principle similar with traditional finance within a crypto exchange, despite the fact nobody forces us to do so. So I'm thinking you don't need regulators to draft out a precise regulation, then you do your internal checking or your internal procedure. You can do it beforehand. So that's how we earn trust with our clients. That's why I earn trust by our institutional. That's earn trust by our governments. You need to embrace regulation before the regulation do really happens. Okay, back to today's topic very quickly. I would like to share about a new thinkings of having a passive income that's exclusively on crypto. So before that, I would like to talk about the world has actually experienced a consistent quantitative easing since the financial crisis. It's still happening now. So the problem of NSQE is we're stepping to a world that negative interest rate or super low interest rate is becoming normal. It's like the new normal. The monetary policy and fiscal policy is getting a little bit less effective than before. So everyone is looking, right now, if you're putting money in the banks that's talking about very super low interest rate, you discourage saving, but at the same time, you need to encourage investment. But investment is a very risky job. It's a very difficult job at the same time. So every investor, every traders, every ordinary citizen right now is looking for yield, looking for having an interest. So it's everyone in the world, within 1 or 2 years, everyone is we can call it a yield-hungry clients or yield-hungry people. So instead of putting money into traditional instruments like bond or structured notes or any kind of complex financial instruments, I would like to introduce a really interesting thing in crypto. So before I understand what is exclusive passive income in the crypto, I would like to talk about consensus and crypto economics, the concept consensus of crypto economics. So this is a phrase that's very, very famous in Bitcoin white papers. The goal of all consensus algorithm is for nodes in the network that come into the agreement of the entire network for the truth, actually talking about a correct transaction history. That is meaning we don't need an authority to tell us what is the truth. The truth is a consensus, it's an agreement. That's what we call the definition of a consensus. Right now, the most common consensus is what we call a POW, proof of work consensus, and proof of stake consensus. So that is a very important concept because in order to build a crypto economics, you need to have two components. The first component is crypto. So we only talk about keys, private keys, hash, transaction ID, signature, zero knowledge proof. That is crypto elements. With the combination of economical drive, like incentive, reward, and punishment, if they work together intrinsically or interlinkedly, then you create something like an open network, which is secure, but everyone working collectively for the same purpose. They collectively, intrinsically working collectively for the benefit for the network. That is the very first concept ever happened in human history. So right now we believe, because of that fundamental reason, there's a lot of token like proof of stake token that's already available in the market. If you deposit the token, that's help to protect the network, to validate the network, you can earn passive interest on that. So OKEx solution is basically we can handle all the staking technical difficulties for you by entrusting OKEx to help you to validate the token, to creating the block, and also receiving passive interest. Right now, we support basically major deposit tokens that are available on OKEx. You can receive interest rates denominated in the currency ranging from 6% to 10% or more. That's much higher than the other traditional space in terms of saving deposits. Another thing of receiving passive interest is the precipitating and poor mining that's running POW, proof of work hash power and mining pool. So basically the idea is you can lease the hashing power to OKEx, and OKEx creating block for you. With the collective hashing power, you will be having a bigger probability to win a block and have another round of relevant rewarded. That is, right now we are ranked number 5 in terms of global hashing power. We're hoping to grow more in terms of OKEx mining pool. Another interesting thing is we're talking about is decentralized finance. So right now, it's taking around 2 years to develop. It's very vague concept before. We're excited before in 2017. We don't see that really big things happen. But 2018, 2019, we see a huge trend, a huge reception on decentralized finance protocol, especially in borrowing and lending. So we wonder why, but we gradually understand the reason behind this, because also it's very unique comparison with the money market between the defined lending and the money market. First, basically, a very important feature is you can issue, you can leverage similar concept with fiat currency that's having similar value without any experience problem. So basically, if you're expecting to receive interest on USD, you can find something to receive similar interest in USD value in token form. In token form means you have a token that have the capability to interact with smart contracts. That's the only difference. The thing is, the difference, another very important difference is the collateralizations. In defined protocol, normally you need to overly collateralize. That's the only risk management or collateral level that they need to execute in defined level, because it's open. While in the banking, it's partially collateralized because it's built on trust. The bank need to trust you. You need to do business for them for a lot of time. For a year experience, you prove your asset, you prove your financial statement, so I can have a much higher risk allowance to take partially collateral of your loan. The other beauty of DeFi is permissionless. So that's why we see a huge jump in terms of user base for DeFi protocol, because everyone just want to borrow really small thing. Like I just want to buy a phone. I don't want to buy a house. I just want to pay my tuition. I just want to do a really simple thing. And plus, I don't have any bank accounts. I'm a student. I don't really have a bank account. I'm very difficult to open a bank account. Or in my certain jurisdiction, it's very difficult for me to trust the bank. So that's why it's one click for them to have a financing over the world. So we think it's very important because with that features, if your combination of all the saving components and remittance available remittance solution, which is available right now in crypto markets, right now your crypto bank, your crypto wallet right now, is actually perform similar features or similar benefits as a bank. You can pay with stablecoin. You can receive with stablecoin. You can earn interest, or you can borrow and lending with just smart contract. Basically, similar features or large banking facility, you can just simply execute on your mobile wallet. Imagine we're talking about 5 billion of population that without a proper financial banking support, without a financial banking access, 5 billion people, it's a global challenge, very much like global warming. So with that features, you merely needs an internet, you can access basically a full-fledged of banking service like that in one day and solve the financial inclusion problem for 5 billion of people. So that's why we are so excited that we are actually gradually stepping into a frictionless economy. We don't need operating expensive branches in rural area to serve farmers. We can just connect your mobile phone to the internet. You can secure a loan, you can buy your furniture, you can refurbish your house, you can get married, you can pay your tuition to improve your children's educations by somebody else in the world that's willing to take the risk, willing to borrow to finance your needs. Without talking to each other, without authority, without centralized body to approve your loan, without anything. Everything will be executed by blockchain. Everything will be executed by smart contract. So we are building our own stablecoin. We are building our own type of token, a platform token. We are building our own utility token. We're actually very, very engaged in DeFi projects. We are going to build our own public blockchain to serve the DeFi ecosystem that's serving the ordinary citizen to buy or sell crypto, to build financial decentralized app, and at the same time, we will serve the needs for the local regulators. So actually, we will build our upcoming OK decentralized exchange. We will build exclusively super nodes just for regulators. For that particular super nodes, they might have the government body and the regulatory body. They have a super oversight to interfere in individual transaction, to have an authority to override and change in the individual transaction. While at the same time, we want to remain the capacity to 1,000 transactions per second. It's still permissionless. It's still an open technological only platform that everyone have the freedom to create your own thing. And at the same time, it's still a public blockchain. Okay, so pretty much for today. So right now we are very active. Today we really want to be very active in Turkish market. After this trip, I think it's very exciting. Crypto regulation is very friendly. We got the real needs here. So I believe we really want to talk to stakeholder and partner. That's how OKEx, in terms of technological perspective, liquidity perspective, product perspective, and regulatory perspective, that we can help to grow and build your crypto business here. We're happy to help. Thank you so much. My name is Lennix.
Thank you very much.